Welcome, and thank you for tuning in to the American Investor Show. Please click subscribe if this is your first time listening. From trader and CEO interviews to breaking news about companies you won't hear anywhere else, nobody does a better job at keeping you in the know when it comes to penny stocks. The term penny stock generally refers to a security issued by a very small company that trades at less than $5 per share. Penny stocks are extremely risky, yet they offer rates of return on investment not seen anywhere else. The host, guest, and callers are not registered financial advisors licensed by any government entity, and therefore, the following should be considered entertainment. The host, guest, and callers disclaim all liability in the event any information, commentary, analysis, opinions, advice, and/or recommendations prove to be inaccurate, incomplete, or unreliable, or result in any investment losses. Before investing in penny stocks, you should consult a professional to determine what strategy may be best for your individual needs. Now, without further ado, your host, LaSalle Anungu.
Yes, what's going on, ladies and gentlemen? I appreciate you joining me. Cut off the intro. Thank you, ladies and gentlemen, for joining me here in the show tonight. Shout out to the people slowly coming into the chat room. Let me make sure you guys can hear me loud and clear. Let me know you can hear me loud and clear. Just give me a press 1. Give me a press 1 if you can hear me loud and clear. All right? Every time I go for a while, come back, sometimes I got to redo the audio. I see my intro's kind of fucked up a little bit. But we're going to work on some things. Okay, good. Shout out to everybody who's been taking advantage of the down market. You know, for a while, for about a year and a half or so, I know I was looking a little bit pessimistic about the market. And you know, for a good amount of the beginning of 2018, I was on the other side of the market. And for the first couple months, I was taking some L's. I had known that we, had a 10-year bull market and blah, blah, blah. But I just couldn't believe that we were going to continue to go higher and higher and higher and higher. And sure enough, I had one of the best blessings that I think I've ever had in my life, which is what we're going through right now. What we're going through right now. You know what I'm saying? And look how fast we've come down. I mean, this is January 2018. We've given it all back. Right? 2018 gains are gone. We're in 2017 now. Shout out to George M, Moneybags, Herbert, Scott, Kenny Dutton. What's up, man? Longtime listener Kenny Dutton. Shout out to you, bro. All right. Shout out to all the new people in here. Shirley Lewis, Corey Kwan, old listeners, Adrian T. All right. Who else was in here? Q Road Network. Shout out to all the people who are listening. Jeff, the Mean Marine. Shout out to all of you guys. All right. One Day Casa. What's up, bro? All right. What we're going through right now, folks, is this is just the beginning. Okay? We've built a country on a house of cards, on the full faith and credit of the United States. And what happens when people don't respect you globally anymore? You can't tell me that we're respected the same way we were 20 years ago. You got China now standing up to us like never before. They say, you're going to put tariffs on us? Okay, we'll go toe to toe. The Chinese are losing big, but they're willing they're ready to say that they're next. They're like, no, we're next. That's basically what's going on right now. See, the news is not telling you what you need to be hearing. The Chinese are basically trying to tell us through these negotiations for tariffs that they're next. They're next. So I want you to be paying very close attention to that. Right now, our government is in limbo. We're actually in a shutdown right now. Okay, we're actually in a shutdown right now. And when we talk about trading during a shutdown, understand that we've got a lot of industries in America that run on what we call government subsidies. So the government pays individuals, private businesses, associations, and whatnot that are involved in that particular industry to be involved in that line of business, right? The cattle business, some grain and seed businesses, right? These businesses are unprofitable or suffer from such severe, global competition that the United States government will give you money to do that business. Right? We know most farmers, as I was going to say, run a loss every year. So the government says, you know what? I want you to be in the beef business. I want you to be in the grain business or whatever. So I'm going to pay you money to be in that business. Well, guess what? During a shutdown, you don't get a check. Right? If you're a small family clinic and you take Medicare, you take Medicaid, guess what? You don't get paid during a shutdown. There's no money to pay you. Right? A lot of people don't understand that. You're a healthcare company. Right? Now, if I go into your hospital during a shutdown, you still have to service me. But guess what? You're not going to get paid. Right? You're not going to get immediately paid until, of course, the government comes back. Why? There's no money. There's no money to send you. Every department is shut down because there's no money. All right? So we've got to understand that. So tomorrow, I fully expect some of the healthcare plays to be affected. I fully expect, we're bouncing now. We're bouncing now. All right? We're bouncing now. But again, I'm not a big believer in it because you got to understand, economic data that is provided by the government is not provided during a shutdown. Right? You're at university, right? We're going into January, winter semester. Guess what? That FAFSA money ain't coming through. You know what I'm saying? That FAFSA money ain't coming through if it ain't already been sent. If it already hasn't been sent, it's not coming through until we get rocking and rolling back in Washington. Someone's saying RIP to federal jobs. I mean, that's probably one of the biggest employers. Well, we know it is one of the biggest employers in America, but one of the top employers that's going to be really affected over the next 10 years is going to be federal work. All right, we're gonna see some huge, massive cuts to federal employment over the next 10 years. All right, and that's just the improvement of technology, downsizing, right? Because the government just doesn't have money. Government doesn't have money. I'm not even, somebody put in Social Security. I'm not even expecting to get Social Security. I'm not even, at this point, they can take it out of my taxes. They can take it, whatever. I'm not expecting to get it. I know they're not going to pay me. They're not going to pay me. All right? They're not going to pay me. Consumer cyclicals. We're going to talk tickers here in just a bit. We're going to talk tickers here in just a bit. But again, I'm watching the futures market right now, ladies and gentlemen. And again, we're bouncing, but don't trust the bounce. I'm trying to tell you, don't trust it. We can bounce tomorrow. We can bounce day after Christmas. I don't even know. What are the hours? I'm on set it and forget it mode with my trades. So what are the hours? I know we're closed Christmas Day, but do we have a half day Wednesday? Somebody let me know. Okay, yeah, I know tomorrow. But what about Wednesday? Is that a half day too or no? Yeah, I know we're closed Tuesday. Okay, 9:30 to 2. Yeah, yeah. Normal Wednesday. Okay, normal Wednesday. Right, right. Normal Wednesday. All right. I'm not trusting the bounce. I'm not trusting the bounce. All right. But you've got some perma bulls out here who are just obsessed. They're obsessed with us getting back to, 26. All right. Forget about it. Forget about it. It's not happening. We had Powell. Powell basically saved this country the other day when he decided he wasn't going to fall to Wall Street pressure and continue to allow the American people to finance the dreams of Wall Street. He saved this country. For 10 years, we've allowed Wall Street to be financed by the backs of hardworking, poor, and working class people in this country, to borrow at basically no cost. They built massive asset bubbles, many of them worthless, these unicorns that they fool the general public into believing that they're valuable, and they're not worth anything. They're not worth anything. I made this post on Twitter. I said, somebody tell me how Square Trade is worth $24 billion. I posted an article from 2015. 2015, the company was worth 5. They went from 5 to 40 billion in 3 years. 5 billion to 40 billion in value in 3 years without ever generating more than $1 billion in net revenue. Ever. Don't tell me this company is worth what it's trading at. It's not. You can't tell me that, man. You can't tell me that. Right? So I've got long-term puts on it. I'm telling you right now, there's nothing stopping this thing from going straight to single digits. Look at that Gary V video that I put also on my Twitter. When these unicorns and these over-leveraged mid-caps, when they can no longer borrow at the prices that they're used to, which is basically zero, they're in trouble. They're in trouble. So this is a great opportunity for you as the trader. I don't care if you've got just $500 to your name. SQ is not an expensive stock. This is a $50 stock. You can go out with a leap, right? A year out on the option, right? Give yourself some time. I don't care if you go with the $40 leap option. Right? It's dirt cheap. It's still pretty cheap now. It was cheaper 3 months ago. Right? It was even cheaper 3 months ago. But I mean, yeah, you're paying a little bit of premium here. But set it and forget it. Set it and forget it. Now, here's the thing. They're already threatening. If you saw the Bloomberg article, you've got people like Jim Cramer and this, Robin Sana, whatever his name is from CNBC. I called him a disgusting man today. I think it was yesterday. I tweeted him. I called him disgusting. Because people like him and Jim Cramer, that guy's disgusting, man. That guy's so nasty. He's just a nasty man. These people don't care. They will have asset bubbles, all over the place if it was up to them. They don't care. Have you paying $2,500 a share for Amazon, and they think that's good for America? It's not good for America. Yeah, it is mad money. Come on, man. Yeah, I want to talk about a stock, but yeah, hey, just to let you know, my charitable trust. I got this in my charitable trust. He's telling you to buy the shit that he owns and sells every day. Yeah, telling people to buy GE. Oh my God, he's horrible. These people don't care about you as a trader, individual trader, hardworking American, tax-paying American. These people don't care about you, man. They'll have $3,000 Amazon. They don't give a damn, and convince you that's good for America. Look at this. Look at Amazon. If Amazon could be trading now at $1,300 a share, right? With the Fed going up 0.25 basis points. So tell me why you said that it was a buy at $2,000 a share. $600 a share in 3 months gone. These people lie to you, man. These people lie to you. You know? And I watch CNBC damn near every day, at least an hour of it. And I just like watching for the bullshit. I just love watching for the bullshit. You know? Because the truth is, when stocks are cheap, that's when you, as a normal American, and when I say a normal American, I'm talking about anybody who's got $1 million liquid or less. All right? Million liquid or less. All right? A market that trades fairly, a market where only the best survive and pay a good dividend. Right? Companies built on real investor, what's the word for real shareholder growth and profit? Tangibles. That's an economy that works. Huge mega companies. I'm telling you, I'm not saying the fundamentals don't matter. I know we got companies out here making big bucks that are losing their ass, But we've got also a lot of companies that don't deserve to be trading at the multiples they were trading at. We can talk about Netflix, man. We can talk about Netflix. Not too long ago, we can go back to shows where we had Netflix trading at 146 times earnings. Putting up $146 for every $1 in earnings. That's insane. Still trading at a PE that's, in my opinion, unjustifiable. Yes, it's a new company. Yes, people cutting the cords. 85 times earnings still seems a lot to me. Right? Still seems a lot to me. Still very expensive. And that's why I got, again, if you follow me on Twitter, I've got a $200 January put on Netflix. That looks very beautiful. Every day, the market opens up. If Amazon goes to $900, you're going in like crazy. Well, I understand that. Look, at the end of the day, it's still a great company. I still think, in the end, Amazon wins. I still think in the end they win, right? But it's still relatively expensive. And again, I'm not going by, how many billions they earn. I'm just talking about you as an investor going in there and trying to buy some damn shares. It's expensive. Macy's will be trading at Macy's, I'll give credit where credit is due. Macy's has been turning it around there. They've had a really good 3 quarters here. The numbers have been pretty decent for Macy's. They've closed unprofitable stores, sold out excess inventory. They're trying to do something there, but I think in the end, Macy's loses. In the end, Macy's will be, Woolworths and all five and dimes, and it'll disappear. I think in the end, Macy's is a memory. Is a memory in the end. All right. Right now, the fact of the matter is, it's the World War II generation and their children that's holding up Macy's. But when I look at particularly women in my generation, they're not going to Macy's. That's all that's holding that situation up. All right. I think if you ask 20 women under the age of 30, they'd rather go to Fashion Nova than they'd go to Macy's. I know some of you in here don't even know what that is. You got 2 shares of Amazon, Kenny Dutton? Okay. Montgomery Ward, yeah, that's another one. Bye-bye. I think they're already gone, right? Montgomery Ward, they're already gone. That's basically a Woolworths. Yeah. All right, everybody shops at Amazon or Target, but Target themselves, I thought Target was taking L's too, right? Aren't they taking L's now too? Yeah, there we go. Here's Target. That last earnings report wasn't that great. They're going to get their asses handed to them too. But the brick and mortar doesn't work anymore. The brick and mortar does not work anymore. Now, I'm not saying if you open up a nice little small store, you can't, be able to support yourself. I'm talking about you've got 1,500 stores, 80,000 employees, 50% of them are getting health care, 50% of them get some bullshit plan. That doesn't work anymore, in my opinion. That doesn't work anymore. You're always going to have places where you physically go in there and do your shopping and whatnot. But most people hate that. You know how many people hate going to Walmart? Hate dealing with the basket and going through the aisles, bumping into people and trying to find where this is at and that. Most people hate that shit. They hate it. If you ask them, I can't stand going to Walmart. Ugh. That's why they love the online thing. They love the, being able to buy your groceries and then going to pick it up. They love it. They love it. So let's take a look at what you guys are looking at. Nothing's changed from the last episode. Still short, big lots. Netflix. What else? IWM, of course. IWM is going sub 80. Again, there's just so much bullshit in here. It's ridiculous. The Russell 2000 is full of so much junk. So many companies that, that are already struggling as it is. There are thousands of mid-cap and small-cap companies that are in this thing or trade across the markets that don't pay a dividend. And they don't pay a dividend because they don't make enough money or they've got so much debt, whatever profit they do generate, got to pay those obligations. And now with interest rates going up, there are going to be some payments that unfortunately aren't going to be made. And there's some companies just like that inside IWM. And that's why you got to take advantage and play the short on this thing. Now, short term, yes, we're going to bounce. All right, I know somebody's going to say that. Yes, the bounce is going to happen. Again, could be tomorrow. But again, I think tomorrow, Wednesday, hell, going into Friday, if we get a bounce back higher, I think it's just an opportunity for you to buy some discount long-term puts. That's what I think. There's not a shred of data that anybody can show you, not a shred, that will tell you that 2019 is going to be better economically for this country than 2018. Not a shred. That's the fact. Otherwise, it'll be it'd be all over Twitter. It'd be all over, everybody's pointing to a decline 2019, 2020. Right? We're pointing to a decline. So if I'm a factory, and during the recession and over the last 10 years, I've expanded 50,000, employees nationwide. I've hired over the last 10 years as I borrowed money on 0%. And now my, obligations are a little bit more expensive for me to pay. 2%, 3%, 4% higher, whatever it is. And I can't meet those payments. Guess what? I'm going to lay off people. I'm going to lay off a lot of people. And this is happening to a lot of companies in this country. It's going to happen to a lot of companies in this country. We've got a lot of companies who built, new wings, new departments, bought new subsidiaries on cheap money. Cheap money. We just had Verizon write off $4.5 billion. They said that their acquisition of Yahoo and AOL was an L. It's worthless. They can't get half for Yahoo and AOL. And look it up. That's what Verizon just said. They just said. So now Verizon is laying off people like crazy, trying to make up for it. Now they're what's next in 5G, so that's holding up a little bit. But I'm watching it, because right now we're literally right there at the 50 RSI and Verizon on the weekly. All right, we're right there. So this is one of those plays that, it's not going to move down fast, but if it moves down, it's going to be consistent. It's going to be consistent. All right. Oh, the financials. Somebody brought up Goldman Sachs. The financials have been, just beautiful trades. I mean, you can look up Goldman Sachs. You can look up J.P. Morgan. The financials have been beautiful. Huge L's on the financials. I mean, here's Goldman Sachs on the weekly chart. All right. Shout out to the people who've taken advantage of my 2510 system, the video I made. Use a weekly chart. As you can see here, if I was following this chart based on my system, on Goldman Sachs, you would have made a killing. You would have made a killing. And this is Goldman Sachs. You can look up J.P. Morgan, right? Here's J.P. Morgan. What's Wells Fargo? I think it's like WFC, right? Yep, WFC. Wells Fargo. At the end of the day, it's the same thing. They're going to have to be paying more to lend from the federal government. They're going to have customers who are going to default. All right. You're going to see some of these buy here, pay here, dealerships close up because they're not going to be able to get the capital to buy inventory like they used to. It's going to get tough out here, man. This is just the beginning. This is just the beginning. I don't want to sound like a fearmonger, but we did this to ourselves, man. And I'm not saying you and me. I'm talking about people we put in leadership who don't want to be honest, who don't want capitalism to play fair, to run like it's supposed to run. Picking and choosing winners, picking and choosing companies that survive, companies that don't. It's horrible. There are a lot of banks that should no longer be in business that are still in business. Let me say KRE. Yeah, KRE is interesting. But again, look for a bounce this week. Look for a bounce this week. All right. Look for a bounce this week. And again, this is for an opportunity for those of you guys who've been on the sidelines to step in here. If you've been on the sidelines, this is an opportunity for you to step in here. Because I'm telling you right now, if we get a nice week, right? Let's say the Bulls get what they want. They get a nice bounce. This goes into same time next week. Let's go next week Wednesday, right? You're going to start hearing that we're back talk. You're going to start hearing it's time to go long talk. Again, use your moving averages, and let that speak to you. That's going to tell you everything you need to know. You don't need to listen. You don't even need to listen to me. You don't need to listen to Jim Cramer or anybody on CNBC. The technicals will tell you everything you need to know about where we are, in the chart. Someone mentioned, Jeff, you saying Facebook getting sued. Yeah, what's going on with Facebook right now is just a hit job. That's basically what that is. It's just a hit job. It's an orchestrated hit job. I don't know if it's coming out of government, Wall Street. It's individuals orchestrating the downfall of this guy. I don't know who he decided to stop paying. But at this point, it's just a hit job right now that's going on Facebook because it's ridiculous at this point. It feels like you've got individuals just going out of their way to try to shit on Facebook. And I'm not going to say that the platform hasn't been losing steam. It has. User engagement has declined a little bit. We've seen it in the earnings reports recently. But we can't sit up here and act like Instagram isn't one of the greatest advertising tools out there right now. We're not going to sit up here and act like WhatsApp, which is also owned by Facebook, isn't probably the number one, probably the most important communication tool in the world right now that has yet to be monetized. So we just got some people out here who are just straight up haters going after Mr. Zuckerberg. So I'm thinking long term, Facebook wins. Facebook wins long term. All right? Facebook, at the end of the day, it's probably the most powerful, what's the word for it? I don't want to say identifying tool, but if you want to go on a website and you want to prove who you are, there's nothing more powerful than a Facebook account that's older than like 5 years. A Facebook account that's older than 5 years, that's been used regularly, can you authenticate yourself any more powerfully than that? Maybe with your hand and your eyesight or your social security. But I'm talking about not giving any information like that. Can you authenticate yourself any more, more accurately than with a Facebook account that's been around? So I'm seeing different lines of business for Facebook going down, in the next couple of years. That Facebook marketplace, that shit is the truth. That Facebook marketplace, that shit is the truth. You see their name. You can look at their account, figure out, okay, is this guy fake, real? What is he selling? How, don't sleep on Facebook. They're going through their shit right now. But I think the future looks bright for them. The future looks bright for them. Somebody bringing up Apple, APPL. Yeah, we're at peak Apple. Would everybody admit that we're at peak Apple? I got some hate email on my last episode because you're talking about foreigners. Foreigners are not stupid to buy Apple. I said, yes, you guys are stupid for buying her. Because, when we talk about Apple, particularly when in the third world and developing nations, we understand that those are status products over there. If you're in India and you're in certain countries in Africa, like I was in the Congo recently, you got an Apple. I brought I had a 6S. I sold it to an idiot in the Congo. I was like, you gonna pay me that much for this bullshit 6S? Man, you can have it. You can have it. You know, give me that money. Now, those are status symbols in the third world, but at the end of the day, you know, when I look at Apple, I look at BlackBerry 2006, 2007, right? I look at BlackBerry 2006, 2007, just when it was like, that ping shit ain't really hot no more. You know what I'm saying? That ping shit ain't really that hot no more. That's how I'm looking at Apple. You know, people used to say the same thing about BlackBerry, like BlackBerry was just going to be around forever. Where's BlackBerry at now? You know, you pull out a BlackBerry now, people looking at you sideways. You know, you're almost embarrassed to take out a BlackBerry now. You look like you're behind the times. You look like you know, something's wrong with you. Do I trade any FX or options? Yeah, I if I do Forex, it's always the exotics. And one of the exotics, and I love the US dollar to an exotic pair, right? Because I just know that a dollar is always going to beat that, right? So USD, South African Rand is my favorite, just because it's dirt cheap to trade, and you kind of already know where that's going to go. All right. Ace V, you're still waiting on that call. Just might end up on YouTube University, Google Library. What are you talking about? Ace V, what are you talking about? Yeah, Forex is boring. Yeah, Forex is just kind of one of those things where it just takes weeks to get where you need it to go. That's the only thing. You just you know. Oh, I don't even want to talk about crypto. It's just so embarrassing. It's so embarrassing what's happened to crypto. You know, one of the greatest shorts probably that we'll talk about, to ever happen, GBTC. You can't even get, I try to get one share. You can't even get that. GBTC. Probably the greatest short. Never reverse, it did reverse split right somewhere at the top or something like that, right? You can't get a piece of this. Everybody knows where this is going. I tried at 16, I tried at 12, I tried at 9. You can't get a piece of this. What happened to Bitcoin is just embarrassing. It's just embarrassing. And I'm glad I didn't get caught up into that. Almost did. And I felt the pressure. I felt the pressure because you had people, getting 100,000 subscribers overnight. You know what I mean? It was crazy for a while. Oh, huge manipulation. Huge manipulation. Somebody saying J-Nug is dirt cheap. Yeah, I've been talking gold for the longest now. If you're going to play, of course, I'd rather you play GLD. Of course, I think that's a better way to play it. But, if you want to pay the leverage J-Nug, you can do that as well. But, again, GLD is probably where I want to be here. We are on the weekly chart. And it is a buy here at these levels. All right, so GLD weekly showing it's a buy. We're above the 50 moving average. 25 moving average, 50 RSI. All right, we got the buy signal in GLD going into this week. All right, so GLD is a buy here. GLD is a buy here. Michael Black, what's going on? You have 1,000 in your Robinhood account. What would you recommend to buy? You got 1,000 in your Robinhood account. Let SQ pop this week and get yourself some SQ. Look up some of these unicorns, man. These unicorns that are unprofitable. That's where you want to be for that. I don't want to say easy money, but for the reliable money. Some of these unicorns like SQ, like Grub, GRUB, IWM. You want to go for trash here. You know, you want to go for trash. You know what I'm saying? You want to go for companies that were just, running because they were, affiliated with what's hot. Netflix is probably too expensive for you. I missed a big one on MU. MU was a big one I missed. I missed out on MU. This one, not saying that this is a shitty company because, they got a pretty good data center business, but that market cap is a big problem. But it's dirt cheap right now. It's dirt cheap right now. It's too dangerous of a put right now, trading at just 2.5 times earnings. Look at those companies that are, trading at absurd PEs, man. Absurd PEs. PayPal still holding up there. That's what's up, Desert Edge. Moving on up, man. Like trash companies. Look at that. Like Grubhub. Grubhub trash. These are companies that they're not profitable. These are not profitable businesses, man. Look at Grubhub. Huge. This stock's lost over 50% of its value over the last 3 months. 50% of its value. Still got a $6 billion market cap. And again, here's the inside. Here's the 50 cross, right? Below the 25 moving average on a weekly. You go short here. All right? If you can afford a leap, buy the leap. Whatever you do, you want to buy an option with some time on it. I prefer you do that just because that's where the real money is, I'm learning. That's where the real money is. That weekly, that trading with 3 days left or whatever on your option, sure, a lot of guys make a lot of money with that, but they're not going to show you when they take the L. Yeah. You know what I'm saying? When you're trading on a weekly chart or a 5-minute chart and a stock that's got 10 million shares traded daily, that 5-minute candlestick may represent 20,000 trades, maybe 5,000 trades. When you're on a weekly chart, right, on a stock that trades 10 million shares a day, over the course of 7 days, that's 70 million trades that one candlestick represents. 70 million trades. Excuse me, 50 million trades. We don't trade Saturday and Sundays. 50 million trades. So that means that candlestick is pretty accurate. It's a lot more accurate than the 5-minute candlestick, right? It's a lot more trades, and you're going to get a lot clearer picture of where the market is going. That's why I convince you, to please trade on a longer time frame. When you're talking options, the more expensive the trade, the better the likelihood of the trade going right. Have you noticed that? Have you noticed the more expensive the option is, the higher the probability of you making money? And I just had to accept that shit. I'm just going to have to start buying, options that had more time, options that were a little bit more expensive, if I wanted to start making more consistent money. You know? Someone bringing up MDP. What's going on with MDP? I noticed nobody in here is bringing up crude. Crude is down huge. I don't see anybody bringing up crude. What is a good PE number? It depends on the industry. It depends on the industry. You know, tech stocks tend to have a higher PE ratio because people, you're going to pay more, per earnings for them. Because people tend to just be more excited about tech companies, and inside of that high PE ratio, it's someone said in the chat room, but it's a little bit of exuberance. That somebody mentioned in the chat room. The potential that tech that's being created there will generate significant amount of revenue in the future. The reason why Netflix was trading at 146 times earnings, almost 200 times earnings, and if I'm correct, I think it actually did get to 200 times earnings, is the fact that people just believed that the damn whole world would be getting their entertainment from Netflix. And a lot of people still believe that. Our Davian, you said NASDAQ 100. Yeah, right. We're getting a bounce right now. I'm seeing it. I see we're up 13 handles on S&P futures. You're going to get that bounce. It's we're oversold on certain things. I understand that. Completely understand that. That we're oversold in certain businesses. Right? We've got some businesses that have taken some huge hits over the last couple days. What's that? Oh. Okay. HSBC. HSBC. I gotta learn my keyboard over again because I got one of the Microsoft keyboards where it's got like a big ass split in the middle. It feels more natural, but the letter placement is a little weird, so I'm still getting used to that. But it does feel a little bit more comfortable. HSBC weekly. Oh God, what a beautiful chart. This is, this look at this beautiful, again, 25 moving average, just really respecting it, didn't it? All right, but I mean, this is across the board on the financials. I mean, you're going to see that across the board. Again, here's the Spider Select ETF, which again, if you can't afford some of these financials individually, get yourself the ETF, and you really do get an opportunity to get in on the collapse there at a very, very affordable price. At a very, very affordable price when you go with XLF instead. One Day Casa, what's the ticker on that? Yeah, QQQ is going to be a major loser moving forward. I mean, again, that's another. QQQ is a situation where, again, you've got a lot of the, companies that are going to, not be able to pay their bills. They're not going to be able to pay their bills. And I'm not saying all of them. I'm saying a lot of them. You have doubts through Sal this past week scared the yeah, you got a lot of people who are long. Look, the overwhelming majority of people who own stock are rich people. The overwhelming majority of them are rich people. And for the last 10 years, they've borrowed against their accounts. Right? So yeah, they're shitting they're shitting in their drawers every day for the last couple weeks. Having heart attacks on television, damn near. You got people who got loans out on their on their profits out here. Somebody saying GBTC bounce play. Yeah, I see Bitcoin doing a little bit of a thing there. But I mean, why GBTC when you can go with some of these NASDAQs or these, some of these other small caps out here? Why GBTC? All right, somebody bringing up RHT, Red Hat. Red Hat, it's really interesting because they had an earnings report really save them. All right. I need to know a little bit more about Red Hat and their business. I know they're in the virtualization, right? I think it's like a virtualization company. I don't understand the business too much. I need to learn a little bit more about the business and how exactly they make money. All right, how exactly they make money. Right. Here's Cisco. Some of these IT giants, they're holding on. They haven't been going down as aggressively as the unicorns because they're actually built on some kind of real revenue. These companies really make money. But a poor economy will affect them too. They're going down a little slower, right? The Microsofts, the Ciscos of the world. A poor economy will affect them too. When universities and high schools across this country and across the world don't have $150 per student to upgrade Microsoft Office, guess what? Those revenues aren't going to look too pretty. They're not going to look so good. Selling you the goddamn same software year after year after year. And nobody asks why. Why should I upgrade to Office 2018? I still fucking have Office 07. It does the same goddamn thing. It just looks better. But they've diversified, right? They got rid of the phone business, but now they got a decent gaming, A lot of people didn't take them. I remember when the Xbox came out, they didn't take them seriously, but I think you respect Xbox now. Microsoft has gotten something there. They got something there. It's real. It's real. You know what I'm saying? Appreciate you, 3 hooks. Cost will go down to double digits maybe. Let's look at Costco, man. Let's take a look at where we are in Costco. That's the thing about trading. There hundreds, thousands of opportunities, but guess what? You don't have hundreds of millions of dollars to trade at every opportunity. There are opportunities everywhere in the market. Everywhere. You know it. You see it. Right? But we've all got limited capital. So we've got to, pick what makes sense the most. All right? And yeah, when I look at Costco now below the 50 RSI again, when you start getting to sub 40 RSI, sub 35, you got to look at a possible bounce here. And here on the weeklies, you won't see it so clearly. But, when you move to a daily chart, now we're at sub 25 on Costco. So, yeah, I mean, Costco is going to be one of those plays that you should see some type of slight recovery here. And there are many stocks that look like this. You're going to see sub 30 RSI. This is an opportunity where if you understand that the industry long term is a loser, you wait for the bounce, and you see it as an opportunity to get a discount on a long-term put. That could go against you in the short term, right? In a week or two, it could go against you a week or two. But you understand that with the 7 months, 8 months, or year, or whatever it is that you have on that option, in the end, it's going to work best for you. It's going to work out. It's going to work out. You know. Oh yeah, I mean, look, trading is a scale business, right? It's all about scale. So of course, the more money you have, the better off you are. But again, with you know, just great common sense analysis, you can catch up. Not to Warren Buffett, but you can do very well out here. You can do very well out here. All right, in 5.5, less time if you go really hard on the short term, a lot more risk, but you can have a really good life or a really good account. Let's not even talk about life changing, just a good trading account with some common sense trades over the course of a period of time, a very short period of time. UNG February calls, okay. Yeah, cost is eating the dirt right now. And again, I'm just saying, go after the easy shit. Go after the easy shit. You don't have to go after, the hard stuff. Go after the easy stuff. Go after the tickers are bullshit. You know? You know? When I put out OKTA, another tech giant, OKTA is losing money. I put that out of the shore. I got attacked too on Twitter for this. OKTA is another one. Here's the thing. Volume is a little sketchy on the options, but I just want to put this out there because I already, I know this is another one of those, unicorn type plays that it's got a great business, but in the end it's going to lose because they're not profitable. They're not profitable, and they're not going to be able to continue to churn through money like they do. All right? Candace Owens, you said you moved to Forex. Okay, yeah, that's a common sense play. Look, yeah, that's, the dollar is going to kick these emerging markets' ass. These emerging markets are built to lose. They've got economies that are built to lose over the long term. All right? They've got paper that's worthless. The Ecuadorian dollar, whatever the Ecuadorian dollar or peso it is, nobody gives a fuck about that. That's not ever going to be a competitive currency. These exotics are built to lose. So when you're talking about Forex and exotics, it's only one way to go. It's only one way to go. But again, it's Forex is for the most part still slow. It requires leverage. It requires to really make money. It does require leverage, and then you're getting into some other things, and there's a lot of bullshit there too in Forex. It's a lot of bullshit there too. It's not all roses in Forex. A lot of people lose a lot of money, because Forex is one of those things where a country will sign something or something happens in a country and you just get a huge spike out of fucking nowhere and it wipes you out. Yeah. Nike. Let's talk about Nike. And Nike is another one where, you had a really good day on, what was that, Friday? That was Friday. You had a really good day on Friday. And everybody's trying to, say Nike is good to go, but, they still got China issues. They still got China issues. They still got, again, a bad economy in America still going to hurt them. It's still going to hurt them. Nice play, though. Yeah, Friday was a great day for them. Friday was a great day for them. All right. Right now, Nike here, daily chart, we're right there at that 25, right? And you see how that 25 moving average, that 50 RSI line, you're either going to break it or you're not. You're either going to break it or you're not. And you could break it and you could try to fight, but at the end of the day, the market will always tell you what it wants to do. And if you break it, it's going to use it as support, right? And right now, at the end of the day, 7% gain on Friday, but you couldn't break the 50 RSI. You couldn't break the 25 moving average. And when you look at the weekly chart, you're short Nike. You've got a March put. You got a December put. You're still sitting pretty, even after a 7% day. This still looks good to me. You're holding some 70s. You're holding some 65s. Still looks good to me. More piece. Yeah, we just got done talking Microsoft. Just got done talking Microsoft. It's, again, great business model in terms of the gaming and whatnot. But again, a weak economy is going to hurt them. So if you're going on a put now on Microsoft, again, let the bounce happen. Get yourself a discount. Put some months on the option, and you'll be fine. I want somebody to tell me why we get back to those recent highs. They can't tell you. So if you can't tell me that we're going to get back to recent highs, then that means we're either going to, drift sideways or go lower. My bet is we're going lower. And I'm going to continue to bet that way. What do I think about the Nadex platform? I think Nadex too is again, I like the fact that they've got regulated, they're regulated and whatnot. But I've never met anybody who can consistently generate income from Nadex. There's a brother on YouTube. I'm not going to mention his name. I've tried to have him on my show several times. I said, brother, just call in. You make these Nadex videos talking about you're making 200 here, 300 there consistently. Just call in. Let me get 10-minute phone call. We'll ask you a couple questions. They don't want to come in. I've never met anybody who consistently generates income on Nadex because it's like you're gambling. Now I do love Nadex on the long term, right? I love Nadex when you're betting on a month out, a week out, because then of course you can use some of these long-term charts. But again, notice how those plays are more expensive on Nadex. Why? Because your probability is higher to get it right. Institutional money is not as down as hard. What do you mean by that? Well, Candace, again, I got done talking about IWM is trash. A lot of the companies in IWM are weak. They don't make any money. They don't pay any dividends because they borrow in order to keep their companies going. So that's why you'll see IWM sell off more aggressively than you will see QQQ or SPY sell off. IWM are bullshit companies. Many of them would not exist if capitalism was allowed to run the way it's supposed to. Yeah, absolutely. But AU is going to be a killer again, though. AU is going to be a killer again, and it would have been a killer again if Powell had decided to suspend. If he had decided to suspend that interest rate increase that's going to happen here in December, gold would have just went crazy. AU, GLD, and of course gold itself would have went crazy. All right? Because if you're a foreign investor and you're saying you got millions of dollars in the markets and you seeing Wall Street the president able to affect what is supposed to be an independent body, oh, I'm going into gold. Because now you're no longer working in the best interest of the goals that you were set to manage. Now you work for Trump. You work for Wall Street. You're compromised. You're compromised. So I'm not going to put my money in equities. I'm going to move to gold. I'm good. All right? So you would have seen gold go crazy if Powell would have bent to the will of Wall Street and Donald Trump. You know? So keep watching that, right? Because now, as I said, they're talking about firing the man. You know, they're talking about firing him because he wouldn't cave. Isn't that crazy? The man's doing what's good for the country. And again, because the wealthy are taking L's. That's why everybody's upset. They're not upset, you know, about all these companies that are going to be firing thousands of people, hundreds of thousands of people over the next 3 to 5 years. They're upset because Amazon is down $600. Apple is down, $50 or whatever it is now. All right? That's what's got them mad. They don't give a damn about you. You know? Let's talk about some other plays here, man. You know? Let's talk about some other plays here. Let me know in the chat room. Real quick, PTOTF. If you follow me on Twitter, you already know where I'm at with that. Sitting pretty. This thing is going to a penny. I'm telling you right now, it's going to a penny. It's a bullshit product. Not saying it doesn't work. I'm just saying they're not going to be able to get the money they need to make it be, you know, what they want it to be. That's going to a penny. All right. I've already talked Netflix. Netflix again is overpriced. Look for Netflix to go below 200. Look for Netflix to go below 200. Their cash burn is ridiculous. It's absolutely. I think what's their debt now? Hold on. What's their net debt? Okay, $5.26 billion. Total debt. Okay, crossed $8 billion. $8 billion in total debt right now, Netflix. $8 billion. All right? $8 billion total debt right now, Netflix. All right? Their cash burn is ridiculous over there at Netflix. It's absolutely insane how fast they're spending money. All right? Because when you go to Netflix, when you're on Netflix's website in another country, it looks completely different. When you're in like India or you're in Africa or you're in Netflix looks completely different. They create and buy sitcom shows, movies for the area. So they've got all these different, you know, setups for different countries. That's a very expensive operation to maintain. And they're having a hard time doing it, you know, affordably. And for a long time, their signups have been, you know, the way they've been able to you know, maintain that. But I'm telling you this right now, they have 1 month of trouble over there, or 2 months or a year, where signups aren't coming in, which I think could be this year. It's going to be a problem. It's going to be a big problem. That's why BKNG. Why I'm not familiar with that ticker. BKNG. What is that? Booking Holdings. Booking Holdings. Why does it sound familiar? Booking Holdings. But I'm not sure what that is. Is this Booking Priceline? Or no, this is it booking.com? Oh, so it's Priceline. Okay. Yeah, not familiar with the stock. Trading at 18 times earnings. That's actually pretty cheap for a tech company. Again, I'm going to have to do my research on it. Don't know too much about it. It doesn't look like it's got crazy volume either. All right. God damn, $75 billion market cap. They're trading at just 18 times earnings. That's a rich company. All right. Yeah, they were having some issues, Stock Boy. I haven't opened it up in a couple hours, so I don't know. But I was having trouble logging in earlier today. Yeah, but Booking.com, again, as I said, like a poor economy is going to affect all of these plays. A poor economy is going to affect all of these plays. You know, there's no guessing games to be had here. You know, again, put up your moving averages and let them do the talking for you. You know, this isn't 2017 where you had to, you know, kind of be scared or whatnot because you didn't know when the bottom was going to fall out. Well, the bottom has fell out. You know, it's here now. Absolutely, Troy. Look, Troy, we've lost all of the gains for 2018. We've lost all the gains. You know, and what I'm trying to tell people is don't watch this go past 2017, all right, before you decide to take some action. Where's 2017? Right here, right? 2017, January. Boom. All right? Don't wait till here to decide to jump in. You know? Can I make that bigger for you? You know what I'm saying? Because you're going to get the bounce. All right? Let's say we get 1 week. Hell, I'll give you 2 weeks. But you still can't tell me we're not going back here. You know? It's all catching up to us now. As you say. All right, 500 points 2 days in a row. We're headed in one direction, folks. You know, and I'm not going to sit here and tell you I told you so, but I got a right to you know. Let me see here. To be prideful right now. You know. Look at that. That's 2009 down here at 70. I'm not going to say we're going to get down to 2009 prices. I know, you know, structurally, in certain industries, we've really developed since 2009. Right? I think tech is further than 2009. I think, you know, you've got some real companies there, but you know, we've got some other industries that, unfortunately, you know, again, gotta give it all back. Gotta give it all back, man. Yeah, I've been talking to inverse ETFs. How long now? Almost a year? Those of you guys who've been watching my show, we've been on this inverse ETFs. You know? SQQ is the opposite of that, right? SQQ. Again, moving averages. You can use that on that. SQQ. This is a leveraged ETF. All right. We've seen this go from single digits to 19 a share now. All right. Since October 1st. Now you're at 19. Buy signal was a couple weeks ago on that. All right. If you don't want to go up 3x leverage, there's smaller versions of it. Here's Dog. I think Dog is not leveraged. But again, still inverse. All right. And QQQ and SQQ is the opposite for the Qs. Inverse of the Qs. All right. There are a bunch of them in there. There SDS. Yeah, there are a ton of them. Check that out at etfdb.com. Or check out my article at advancedequityresearch.com, my website. And I've got a list of some really good inverse ETFs that I think you would really like. advancedequityresearch.com. All right. Yes, indeed. I don't know what's going on out there. I'm hearing the police out there. Crazy. I don't know if y'all can hear that. AAOI? What's that? AAOI? Okay. Yeah, the semiconductors have really been beat up aggressively, you know. The semiconductors are really, really getting hit hard. You know, semiconductors are really getting beat up hard. Here's STM. Somebody brought up AAOI. You know, semiconductors are just getting their asses handed to them. I don't understand the business, so that's why I don't trade semiconductors. Because, you know, I know, you know, there's some macro forces there that I just don't understand. I know this situation in China, but then they also, you know, make a lot of money with some of these data centers that are expanding, and I just don't know how to play those right now. I need to do more research on them. Yeah. Darlene Nelson, yeah, shout out to Darlene Nelson and her option system. I watched her a little bit. You know, I take a little bit of something here from everybody. Yeah, gas and natural gas. You know, when you're talking about, you know, these, when you're talking about energy, again, you're talking about, you know, a commodity that has a lot of macro forces at play there. You know, you gotta know what's going on in the Middle East and some of these South American companies. There's a lot of things going on out there when you're talking about natural gas. So I don't trade these, but I know they are very lucrative. All right. Thank you, Patrick. Those are great plays. Those are great plays. He brought up MasterCard and Visa. We'll take a look at it in just a second. You know, you're going to have huge defaults here moving forward on some of these plays. And not just necessarily defaults from the people who are going to lose their jobs, but also the fact that they're not going to be able to give people the kind of, you know, credit that they would typically be able to, you know, give people. You know, but yes, in a recession, major defaults in credit card debt is what happens. All right. Great play on that. MasterCard, Visa. You know, I mentioned on Twitter that I missed a big opportunity in the regional banks. Right? The regional banks live and die on small business lending and lending to consumers in terms of residential lending as well. So you have some banks like STI, right? STI, the U.S. SunTrust, right? SunTrust Bank. Those of you guys who live in the South, you know SunTrust. Big time loser right now, right? Why? Because their customers are going to be greatly affected by this increased cost to lend money. All right, that was a big missed opportunity there, and I still think there's some meat on the bone, and it could go lower. Right, there's some meat on the bone there, but now it's pretty cheap now here at single digit PE ratios. There's probably still some pain there, but there's some better opportunities out there still that are more guaranteed. All right. Day trading ETFs. But here's the thing, Tone. Why do you have to day trade why day trade when you know over a week or 2 weeks you make more money? Why day trade for a couple $100 when you can get a couple thousand over the course of a couple weeks? Or hell, you might be day trading getting a couple thousand. Well, if that's the case, if you got the kind of capital where you get a couple thousand in a day, well, shit, a couple weeks, then you're talking, 5 figures. If that's how you ball. Jeff Santil, what's going on? Do I check out this stock called GOL? GOL? Is that the ticker? GOL? Was that what you're talking about? I'm not familiar with this. And it looks like it's an ADR. It looks like this is an ADR. Volume isn't crazy on this. I don't know anything about this company. Looks like it's a foreign business. Brazil's largest airline. Yeah, don't know anything about this business. Don't know anything about this business. All right. But again, in a global recession, I wouldn't buy airlines. I wouldn't buy airlines in a global recession. All right. Tom Bragg said your swing trading sucks. ETFs are so volatile, big moves in both directions, even in the day. I agree with that. That's true. Oh, don't bring up Colmex again. They got a lot of drama going around Colmex right now. That's why, I tell guys just, find a broker that's right here in America that, look, I get it. When you don't have a lot of money and you got people out there that are offering you the opportunity to 2x, 3x, just get yourself a good broker right here in America. Make great trades and your account will grow. But this thing of jumping from this broker to that broker to this broker to that, it's you're going to waste a lot of time and you're just going to end up back at square one and frustrate yourself. Go with TD or Interactive Brokers or E-Trade. They're all good. They all barely charge you anything to trade. We couldn't do what we're doing now in 98, 97. You can Google those ads, all right? $39.99 per 100 shares. It was ridiculous online trading. So be very grateful, what we have going on here. And pick one and just deal with it. And just focus on great trades. But this habit of jumping and, dealing with all kind of weird rules and CF this and God. Why do that to yourself? Why do that to yourself? And then I'm hearing they also make you take a test. You got to pass some kind of test to trade with him. And oh my God, what. ETF normal market tend to reverse around noon. P3 squeeze works awesome in QQQ. Okay. Yes, indeed. All right, so somebody give me some other tickers you guys are looking at. I feel like I'm only talking about my plays here. All right. Another put that looks nice right now that's not, Bank of America. Bank of America is another one, interesting one that you want to keep an eye on. I like Bank of America a lot because, again, it's not very expensive. It's not very expensive. You can get some really good deep in the money puts here. Again, you're going to get the bounce, right? You're going to get the bounce this week. I don't know if it holds because, again, during a market shutdown, a lot of traders tend to stand to the side, right? Because, the government isn't in operation. You got a lot of companies that aren't getting paid. It affects a lot of businesses. I'm seeing a bounce here on the futures, but I don't know if it holds. Right now, it's pretty strong. We went from 12 points to 19 now, right? So we could be opening pretty strong tomorrow morning. But every bounce we saw last week ended up being great shorting opportunities. Every single one of them ended up being really good shorting opportunities last week. So let's see if this week is something different. Yeah, MU is one where, missed opportunities for traders. All right. Stocks lost over 50% of its value since October, or it's actually since May, excuse me. All right, since May. Now it's very, very cheap, trading at, again, 2.5 times earnings. You're set for a very nice bounce here. Again, there are better trades out there. You want to go after weak businesses, and this one, they got something good going on here. It's just the market's been pretty rough on that stock. But I don't see a snap situation here, where you go all the way down to single digits. Has it been there? Yeah, as you see, it did it recently, back as recently as 2016. Can it do it again? I'm not saying it can't, but I don't know. And I've read some of the reports on MU, and they've got a very strong data center business. Yeah. We used to go hard for Tim Sykes products here, but Tim is a guy you start out with, and eventually you got to move on to something bigger and better. But I would still suggest, if somebody walks up to me and, hey, I don't know anything about trading, do you trust Tim Sykes? Yeah, I'll say yeah. You can learn a lot from him and then move on to something else. Tickers that I have inverses if your short game is lacking. Well, not only, Tone, if your short game is lacking, if you don't have the money to short, right? In order to short at most brokers, you've got to have $2,500. If you don't have $2,500, right, and you still want to get in on what's going on in the market, then an inverse ETF makes perfect sense. All right? You've got $500, you got $1,000. You got a little bit of patience, then you can get in on a dog, right? DOG, which is going to get pretty cheap on a pullback if we get it. Or excuse me, on a bounce if we get it. Right? You can get in on a dog. You can get in on a SQQ. You can get in on, some of those opportunities to build your account without having to have $2,500. There's a way to make money out here. Even if you have $100, there's a way to make some money out here. Trust me, there's a ticker for that. Wall Street is about getting your money in the game. They got a way for you to put your money in. Yeah, I looked up PayPal earlier today. Per my trading style, yeah, it's absolute short here. When you look up PayPal, It looks very similar to what you'll see in Cisco and Microsoft and many of these technology companies. Again, the technology companies that are built on a real business, they look like they have charts like this. They have charts like this. They're close to their recent highs, but they are off their recent highs. But they haven't sold off aggressively because people do respect the fact that there's a real underlying business that's generating revenue. The companies that are shit or burning through cash or using, debt to finance their business, they're all down huge. They're all down huge. But per the chart, PayPal, on a weekly does look like a short right now. Where to start for a rookie? Go to TD. TD Ameritrade is a great broker for a beginning trader. Or you can go to Robinhood if you like the mobile thing. I like my customer service, so it would be my thing. But I like being able to call you at 2:00 in the morning and you're gonna pick up the phone. I like my 24-hour customer service, so I go with TD Ameritrade. If I gotta send an email and wait for an email to come back, and you got my 1,000, 2,000, whatever it is you're starting out with, that's a lot of money to you. But hey, different strokes for different folks. What's going on, Juan Diaz? I don't know what to think about Tesla because, Tesla is one of those things that just doesn't trade with the market. It just does its own thing. And it's because it's got a cult fanboy type of following. And that's very frustrating. And that's why I haven't talked about this stock and I don't trade this stock because it's got a real fanboy thing to it where they don't care. They don't even care how many cars this company produces. Their man is Elon Musk, and whatever he says, they're gonna buy. It does its own thing. So I don't fuck with Tesla. I don't think I ever will unless something truly bad happens to the company. They would, then you won't have too much time, to make money on this stock on the downside. But there will be a shitload of money to be made if something really bad happens to that business. You know what I'm saying? Interactive brokers, Troy. I use interactive brokers. Yeah, I'm still here. I'm still here. All right. We got some real traders in the house tonight, so I'm sticking in a little bit longer than usual. All right. Give me some more tickers, guys. What else are you looking at right now? All right. Again, for the easy, and like I use that I use that word loosely. You want to go for the trash. Look for the plays that are in IWM. Some of these are publicly traded. You can get them individually. You can get them individually. That's going to bounce tomorrow if we have a bounce too. That'll just be again a discount for you. Some people are saying this bounce could last over a week. So be it. So be it. Let them get a bounce for a week. I'll tell you what, though. I bet in June we're lower. I bet in March we're lower. So what? You bounce for a week? I don't care. You see the data. AES Utilities. I don't short utilities. These are dividend paying companies. These don't move as aggressively as you would want them to. Very strong Friday, but down 1.6. I mean, again, they're AES, you know, the utility stock. These are kind of boring plays. As you can see here, look at that. 2009, they've been between 6 and 15. I mean, this is too slow. They're more. You want to get more aggressive than that. You want to get a more aggressive play than that. You're in this game to make some money for your account to grow. So, pull up some charts that, again, we talked about SQ, 5 billion market cap to 20 billion to 40 billion. Over the last 3.5 years, 5 years, there are a lot of companies that are trading at some insane, market valuations right now. Well, I don't know. Who said where I see Troy? I don't see where it bounced because it was supposed to bounce this week. Remember? The 50 RSI, and I tweeted that, just before we went straight through it. But it's been support going back to 2016. And we went right through it last week. So that's why I'm not so quick to support the idea of guys trying to quickly go long here. But we'll see what happens. I mean, pull up as you see. This is the monthly chart. We were supposed to bounce this past week. So I can't predict where the bounce is going to be. Because that was supposed to happen last week, and we went right through it. I mean, we went right through that thing. All right. 259 just went bloop. Like a 40 ounce through a paper bag, just right through it, bro. Keep them shut down forever. Funding the wall is not an excuse. Shut down forever. Patriots prepare for military operations. Come on, man. Cringe sniper. I don't know why some of these militia people. I don't know if you guys think like the military can't crush you, or I don't understand. That's why these militia people, they don't really fuck with the military. You ever notice that? Many of them are former members of the military, but they don't ever fuck with the military. Not to go off topic, but I'm just looking at your. But if you guys ever fuck with if any of these militia people ever start messing up somebody's bag, oh, y'all gonna feel the pain, man. Y'all gonna feel the pain. Like they were feeling the pain back in the early 90s, mid to late 80s. Remember that? You had Waco and some of those other events. They were militia people were fucking up with people's money back then. Now they learn their lesson. Oh, thank you for bringing up the pizza companies. We're looking at Domino's now, but pull up PZZA. Look at Papa John's, though. I was looking at Papa John's this week. Here's Domino's. Domino's weekly clearly is short. Let's look at some of these longer term frames. Here's the monthly. All right, if you trade the monthly time frame, here we go. Headed to that 50 RSI. We haven't been below the 50 RSI on the monthly chart in Domino's going back to 2010. So almost 9 years now in Domino's Pizza that it has ever been below the 50 RSI. That's saying a lot, folks. If we get below that, that's saying a lot. And again, yeah, I would buy the put there. Again, I would totally. If you can afford to deepen the money with, significant amount of time on it, go for it. That's a high probability trade there. That if it goes below that, it could be underneath that for quite some time. Or you can go with the spread. You can go with a nice spread going both ways, up and down. All right. Put a lot of time on it and see what happens over the course of a period of time. Money bags, he said, because they aren't stupid. Yeah, that's why I don't, all that malicious stuff is just talk. They ain't really about that life, man. They're not really about that life. They dress up on the weekends, go shoot out in the middle of the desert. You ain't really about that life. What's going on a dope point of view? Litecoin is up 22 to 36 in a week. Yeah, shout out to the cryptos are having a good week. But at the end of the day, when you talk about cryptocurrency, the only value is really what someone else is willing to pay. These are not revenue producing assets. That's the big problem. Our state government will fight for independence. Okay. All right, man. Yes, indeed. All right. Well, I was talking about Papa John's. Here's Papa John's on the monthly. And you had issues with Papa John's before the owner went on a racist tirade. I mean, Papa John's had always struggled with image, and some people always said that their pizza didn't taste so good. So Papa John's, again, if I just had an extra couple thousand sitting around, I would definitely, buy some puts here, because I think this is a company that I don't know if we see 10 years down the road, or a couple years down the road, the way it looks like now. Here's the monthly. Let's go down a little bit. Let's go on a weekly chart. High probability short here. It's been a very high probability short here. 25 moving averages white line you see there. It's been a very high probability short. And again, it's been consistently under the 50 line. And, again, when you buy an option with some time on it, and you've been good. You've been good. All right. Somebody says very low quality pizza at Papa John's. They lost their NFL sponsorship. So they're kind of out there wandering, trying to figure out what happens to the business now. And we could easily see Papa John's go into the 20s by this time next year. Or lower, or lower. I mean, look at a stock like Blue Apron. I mean, we I'm not comparing Papa John's to Blue Apron. I'm just saying, when we talk about how downfalls can happen quickly, look at Blue Apron. When you talk about a company that came out with so much hype and so much, bullshit, and then you find out that for every $1 they were generating from their customers, they were spending 10 to get a customer. Then this is what happens. This is what it looks like. And read on the collab. I mean, there are a ton of articles on how Blue Apron happened. I mean, it's, again, when you get these unicorns and you get people excited, oh my God, they send the meals in the mail, and it comes with all the fresh fruits and vegetables, and, and guess what? People don't really like packaged meat like that. They found out quickly people really don't like their their meat packaged in the mailbox in light plastic and vegetables, and you know what I mean? They kind of learned the hard way. People do, unfortunately still used to going to the supermarket and buying fresh fruits the old-fashioned way. Oh, yeah. And we had somebody call up. Somebody you guys might remember. We had a guy call up who used to work at one of the factories that packed their food, and they were having huge distribution issues. He mentioned the fact that Blue Apron had, problems with their network, with the farmers, and then that's in that situation. Yeah, FedEx was interesting because I actually thought last week we'd see a bounce on FedEx, and again, that's we talked about how all the, it ended up not happening. As you can see here, huge L on FedEx. Huge L on FedEx. All right. Huge L on FedEx. Forgot to be playing my, sound effects here. You see, I'm not set up. I'm perfectly not set up to have any of this running right now. I'll play that again. Oh. Yeah, there you go. For anybody who had calls in FedEx. Yo, Los. The AI is watching. Yeah. Buying precious metals, mining stocks is the only smart move right now. Okay. I don't know. We gotta see what's gonna happen, man. We gotta see what's gonna happen. I'm not a big run to precious metals type guy, just because gold. Don't get it twisted. Has its value, right? You got a lot of people who internationally do respect gold as a store of value, but don't act like that U.S. dollar don't have some value to it, man. May not be what it was 50 years ago, but if I'm in buttfuck Pakistan, I'd rather have a good old Benjamin Franklin in my back pocket than Indian rupee. Feel me? Or even a nugget of gold. Real talk. Real talk. PLG. PLG Platinum Group Metals. Okay, don't know anything about it. Looks like a shitty small cap stock. All right, very low volume. Man, come on, man. Come out of these garbage plays, man. They're better, let's step it up, man. You don't want to be in here anymore. These kind of plays. Yeah, we looked at Macy's, man. We looked at Macy's. Again, I feel sorry talking so much shit about Macy's because, again, the last 3 quarters have actually been really good. And that CEO, man, he or she, whoever it is, they're really doing their best. But the sentiment for the industry, for their company, the economics of the business are just not on their side long term. Long term, the economics are just not on the side of Macy's, and that's why, if you want to short Macy's, it's a great short. It's a great short if you want to put some time on those options. Here we have Macy's monthly chart, right, with December going below the 50 RSI, right, signifying possibility of a long-term long-term downside move going to start happening here. As you can see here, when this crosses the plane, it stays below that 50 RSI for quite some time. So we saw it go above on the monthly chart back in 2010, stayed above there for some time. That was a great multi-year, winner. Now below the 50 RSI back in the 2015, that was a good multi-month loser if you were patient. Had a few losing months here and there, but for the most part, you won over the course of a period of time. And that now here we go, back below 50 RSI. Again, get into an option with some time on it. Each candlestick here representing, anywhere between average volume on a daily is let's just give it 10 million. All right. So we're talking average candlestick on this chart is representing anywhere between, I don't know how many trading days in a week, in a month. All right. Being that we got holidays and also, but let me just throw a number out there, a couple 100 million trades. Couple 100 million trades. So yeah, Macy's is going down, and they're going to be going down for some time. Per this candlestick. All right. 2019 will be the year of the yellow vest. What the hell are you talking about, man? Overvalued stocks like Tesla are going to fall 80%. All right, let's see it happen. What does UNG have to do with weather? I don't. Again, when you're talking about natural gas, again, there are macro forces, right? Dealing with other countries and whatnot. And yeah, weather has something to do with it too, but again, I'm not big on nat gas. Oh, those protesters in France, yeah. Those yellow vests. Yeah, but you see, Europe is different. Europe, they got the police out there. The United States, all they have to do is activate the National Guard and somebody's getting stomped out, man. What's going on in Europe would not be tolerated in any state in the United States, man. The Europeans, they're very nice to their own people. They'll let their people burn shit. And, in America, you can't fuck with people's money like that. In America, you're fucking with people's money, you're going to get stomped out. Yeah, we talked Macy's several times. Macy's is going down the hill, man. We just pulled it up, these reliable long-term charts. Here we go. Here's the trend right here. You can't get more reliable than a monthly chart. You're seeing you're bearish. You got the signal. Here's the short. Now it's all about just buying the right option. And the right option is the one with the most amount of time, as close to in the money as you can get, and you ride it out. If you buy a single in the money call and it falls below my strike price, do I automatically lose my premium if I still have time on my money? Well, I mean, what do you mean if it falls below your strike price? Because if you buy a call... Oh, okay, yeah, I understand your question now. Okay. Yeah, I mean, I wouldn't want to be buying any call options right now, but if you were to buy a call option, and yes, you lose, you do lose money on it. But yeah, if you got a lot of time on the option, you don't take too much of a hit, because you can sell that time value back into the marketplace, and that time value has value, right? But yes, I mean, you've probably lost a considerable amount of money if the option, if the underlying, which is the actual stock price, has fallen below your stock price, you probably lost considerable amount of money. But yeah, that time value will always have a value. It may not be the value you want, but it will have a value. Foot Locker. Foot Locker. All right, let me get a little closer. Let me get into some weeklies here. Yeah, Foot Locker showing that a little bit. It's fighting. Foot Locker is definitely fighting on these weeklies. And I know even on the dailies, Foot Locker is always an interesting one. Foot Locker is always an interesting one, because I've had a really hard time trying to understand Foot Locker, because you remember they came out, Nike came out and said they were going to cut off some of those lower tier ways of selling their shoes. So that was good for Nike, for Foot Locker, being that, they've got, that basically meant that if Foot Locker had a very nice line of shoes, you weren't going to find excess inventory at, some low end store, right? And in every mall, there's some store that kind of has that excess inventory shoe place, But Foot Locker has just definitely been one of those companies that it's just like, how the hell are they hanging on? How the hell are they hanging on? And Foot Locker too. If you live in the hood, Foot Locker is always one of those businesses that's done a really good job of exploiting that community real well. Because not every hood, but a lot of hoods have a Foot Locker. And it's where the D-boys go to really flash and, ball out. And Foot Locker's margins are really nice. I mean, these shoes, they, $20, $30, they're selling them for $1.20, $1.50. They got decent margins, and they pay the employees shit. They pay their employees pretty much shit. Anthony Carter, you said you've been short Foot Locker for almost a year? Yeah, I'm going to go to bed soon. I know, because I've been on for 2 hours. Y'all know I can go all night on this stock shit, man. I promise you it's not going to be a 7-hour show. I promise you it's not going to be a 7-hour show. You've been short Foot Locker for a year, though. God damn. Yeah, it's been one of my most frustrating, and I've been in it before, and I'm not, but yes, we do have the short signal on Foot Locker on the monthly chart with this month's candlestick that is developing. All right. So on the monthly chart, we are showing a bear signal. All right. So we had a decent recovery back here in 2017 to get us to where we are now. But again, hopefully, it could build upon this. But again, it has been a very frustrating stock over the last year and a half. It's been a frustrating play, And again, that's just because the economics of Foot Locker doesn't make sense for the future, Again, the 1,000+ stores, the employees, when people are very, very comfortable buying shoes online now, particularly name brand shoes. You know what it's like to tell ladies, I promise you I can't go all night. Yeah, man, because when I go all night, my girl looks at me crazy, like, God damn, when are you going to go to bed, Like, don't worry, babe, I'm going to be over there. I'm going to flood your mouth soon, all right? Give me a break. I'll be there flooding your mouth in just a minute. Just let me talk some, JP Morgan Chase real quick and some other things just a bit. JP Morgan Chase is one I want to talk about too. This is another one that I wanted to make sure I brought up. I know we talked financials earlier in the show a little bit. But this is another one. Again, incredible couple years. Incredible couple years. But now showing a bear signal on a long-term chart, reliable long-term chart. Oh, yeah, man. Emrin. I've been seeing a lot of people bring up that Emrin. We're going to take a look at Emrin. Right, let's take a look at it right now. But JP Morgan is another one. JP Morgan is another one. Emrin, look, these small caps, I used to be in love with small caps. That kind of what started the show here. But after a while, Tim Sykes started getting even bigger and bigger and bigger. You can't get any shorts. You can't. It just gets frustrating to trade these after a while now, man. It's just, because you can't find, you can't find paper to borrow against. But yeah, it looks like it's a decent looking play. People are getting the shit squeezed out of them. If you're going to trade these kind of plays, you want to go on an hourly chart. You want to go on an hourly chart. Here's a 60-minute. So you see here, the reliable short, is down here at the 25 moving average, which is showing at 688. But people aren't patient enough to do that. So those short, you can look into the chart. You can see people getting their shit squeezed out of them. Yeah. Absolutely, man. These plays are, I don't have the patience for these small caps anymore. Not to say they don't make money, because they do make money, but man, you just get tired of not being able to trade them. Or if you're going long and they're not going right and they start selling off, and it's just like, what the fuck? Long-term charts aren't reliable on small caps. Even the weekly sometimes isn't reliable. It gets frustrating after a while. When I found out about options, long-term charts on some of these not expensive, but tickers with real volume that people care about, it's just so much easier. Less stress, man. All right. TDC. Let's take a look at TDC. God damn, we got 84 people in here. What's up, everybody? Glad to see we got people in here who loving the market as much as I do. Yeah, she's definitely doesn't want me to go all night, but I love this shit, man. Terra Data Corporation. I don't know anything about this company. You're gonna have to let me know. I don't know anything about this company again. Yeah, Terra Data Corporation sounds like one of those companies out in the mid 50s, early 60s. If you go back and read some of the books on Wall Street from like that era, they were so obsessed with computer chips. Every company was named like Teradyne, Supercore Systems, Subtronic Bits, or something like that. Like they were just a shitload of companies with those kind of names. Terra Data just sounds so 1950s. Yeah. Absolutely, Ibrahima. We're definitely going to probably get that. For those of you guys who are studying the markets, of course, I don't know if, a lot of people don't like to read, but Trader's Library is still up. Shout out to the Russian guy who's managing Trader's Library. It's still up and doing very, very well. Again, the ebooks at Trader's Library is free. Again, I believe it is Trader's Library. Library.com. .com. I put vom, but .com. Traders. I fucked it up but that's still up. So, and again, they got a couple hundred ebooks there, and they're all free. And it's some really good books for you to take some knowledge off of. All right. But again, man, I got to harp on that again. This bounce this week, next week. We got a short week this week, so let them have the bounce this week. Let them have it. We got a short day tomorrow, full day Wednesday. Let them have it. I'm not tripping on it. I'm still going to stay long to the put side. And when still going to stay on my puts long term. I told you I got a January 2020 Netflix 200 option going to next year, because I know you can read the data. They've already told you. Powell's already had. You can read. I watch Powell speeches. We are forecasting a recession in 2021. Like, goddamn, they're telling you where the market's going. I rate the public library used store. Everything is $1. Yeah, I don't buy physical books anymore just because they take up a lot of space in the house and dust. Now just get yourself a nice little Walmart $40 tablet, and bro, that will pay itself, over and over again 1,000 times, man. So physical books now is just like, it's just heavy shit in your house. Get yourself a cheap tablet, and do your thing. Shout out to Keith Snow on the Prophet. Yeah, Herbert. Oh, you got tab? Okay, that's what's up. Yeah. I've been teaching myself on this website called Code Academy. I've been teaching myself how to code. I'm learning HTML right now so I can improve my website. And, man, it's actually pretty fun. Not to change the subject too much, but it's actually pretty fun. Shout out to all you guys who know how to code, man. Hopefully I can get to your level and learn some JavaScript. Because, look, I know my website is ass, and I'm gonna work to improve it. I'm not gonna pay anybody to do it. You talk to these guys, give us $1,500. $1,500, we'll take your website. Oh my God. You have so many visitors. Trying to help this brother from Africa. I didn't want to pay him that, but I'm like, God damn, $1,500, and he was on the low end. Them Indians charge more, Pakistanis. That's typically the guys you got to work with in that space. So I'm like, fuck it, man. I'm gonna do it myself. Wix is interesting, but the SEO is horrible on Wix. The SEO is horrible on Wix. All right, a couple more tickers, and then I'll let you guys go. What happened to that tech company called Juniper? There we go, Juniper Networks. Where are they at? Oh, okay, it's still a bullshit stock. Okay, it's still a bullshit stock. Boeing. Boeing is really interesting. Boeing is really interesting here. It's again very liquid, great options. Not the cheapest options in the world, right? especially if you're going with some of these in the money play in the money calls or put in the money puts. But here's another one that's struggling and had a really tough month this month, last couple months, last 2-3 months, like many other stocks. And it's up pretty big over the last couple of years. All right, transportation across the board. You look at some of these transportation ETFs, they've been pretty big losers across the board. But Boeing is another one. Boeing's another one. Had an unfortunate accident in the Philippines. Investing in Africa depends on who's paying the dictator or government. Absolutely. Absolutely. All right. How do I feel about GLD? Go long, man. If you got the extra cash for it, just be a little patient. Just be a little bit patient if you're going to go with, on GLD. Because, again, Wall Street is playing games right now. The president is playing games. They're trying to, get back to blowing air in a balloon. Toll Brothers. Yeah, the home builders are going to lose. I posted on my Twitter, it was either today or yesterday, they're already having builders cut the cost on some of their homes or cut the asking prices on their homes. In Dallas right now, you've got builders cutting the price of their homes by over $150,000 on some homes. Visit my Twitter, Got Penny Stocks on Twitter, or follow me on Twitter, Got Penny Stocks, for that article. Yeah, Got Penny Stocks, GOT Penny Stocks, GOT Penny Stocks. Follow me. A kid who's 17 made $12 million in a month shorting Amazon. If he made $12 million in a month shorting Amazon, he's one lucky seed, because I bet his daddy's got a lot of money. He's a lucky seed. That's why I used to read these articles about miracle trader kid, $12 million or $1 million, what, and I would just do a little research on them and come to find out, man, they'll have parents who worked on Wall Street, or parents who were well connected in the financial space. So these people then kind of come across they're kind of pushed into it. Yeah, when you see these kids, I'm not saying some people are naturally talented, but when you do your research on them, what you will find out is that they have parents who are well educated in the financial arena. So these are not, I don't know the word for them. They're not aberrations, you know what I mean? These are people who are really developed to be what they are. All right. So we're going to wrap it up, folks. I'm going to go ahead and wrap it up. For this week, again, watch the bounce. Let them have the bounce. I'll be back here on Wednesday. I'll be back here on Wednesday. And we're going to see where the market ends up. It'll be really interesting. I hope you guys have a very good Merry Christmas. For those of you who don't celebrate it, whatever it is you do, enjoy yourself while everyone else is celebrating that holiday, I guess. And I just want to see where what happens on this half day. It's going to be very interesting tomorrow, because it's been a minute since we've seen how the market trades during a shutdown. So I'm going to be curious. And we'll have just a short show on Wednesday. It will be a short show on Wednesday. I promise I won't go, 2.5 hours on Wednesday. Merry Christmas to you too, Jim Gray. Merry Christmas to you too, and everyone else in the chat room who came and chilled with me today. I know many of you guys are off. Shout out to the people in the chat room. Press like on my video, man. Press like on my video. I know I need to go harder with the advertising and all that shit and promoting and all this shit of this show. And I always say I'm going to do that, but 2019 I'm going to get better at it. But that shit comes with a lot of pressure. I just don't give a fuck about. I really am just in it to enjoy my life, make money, and be able to buy things that I really want, you know. But I know I gotta go harder at those things. All right. So a lot of things for 2020, or 2019 rather. We'll discuss on Wednesday. Some hopes and dreams. I'd like to hear what you guys have planned for 2019. We can go back and forth about that. Amongst some companies that probably won't survive 2019. We'll talk a little bit about that. You know, we didn't even go into Snap today. Nobody really brought up Snap. Is Snap going to survive 2019? Does Snap get bought out in 2019? You know, that's a conversation there. You know, Snap has been a huge monster winner for put buyers